Alright guys, so this is your end of the world update and let's talk about Japan today. The land of the rising sun is about to face rising inflation. Japan is caught in the unthinkable situation. Their debt is so enormous, 260% of GDP, that they have very little room left to maneuver. They are also sandwiched between competing global powers. Do they bow to the US, the leader of the G7, or do they cooperate with China, which is their biggest trading partner? And it gets worse. The country is in political chaos. The ruling party, the LDP, has lost the majority of votes. People in Japan, they punish Ishiba's party because the economy isn't doing well. In addition, there was also the slush fund scandal where the LDP, they hid a ton of money away from public knowledge. Thanks to this instability, Japan is no longer a safe haven. It's the wild wild west. The opposition collectively holds the majority of seats in government. This of course will mean political deadlock. Ishiba will have a nightmare trying to pass new bills, especially when it comes to fiscal policy. Japan could be facing a period of economic stagnation. Almost immediately, the Japanese yen collapsed against the dollar. Since the start of the year, the currency has been weakening month after month. They hiked in March, but the yen kept collapsing. They hiked in July and destroyed global stocks, but whatever progress was made is now reversed. Understand what this means. Japan's interest rate on its mountain of debt is now positive, so the government is bleeding even more money. Because of geopolitics and this election shock, the yen is back to square one. They have nothing to show for it. If you're heading to Japan for holiday, well, this is great news for you. We are back to 153 versus the dollar. So that sushi dining experience is going to cost less. And that trip to the hot springs, well, you can go for two now. Tokyo Disneyland sounds really good at this point. But it's horrible for people in Japan. Their buying power is going to collapse and domestic consumption will be in a deep slump. And this pushes Japan into a very difficult situation. They would have to drive more economic growth through export, selling more stuff to the world, sell more cars, steel, PlayStations, and cosplay culture to the world. But here's the problem. The global economy isn't a nice playground anymore. We are deglobalizing, and even the US is going to compete fiercely against the Japanese. Now, I don't think many people still get this part, and it's funny when you see things like this on the streets of Japan.
We will make America wealthy again. We will make America healthy with Bobby again. We will make America strong again. We will make America proud again.
I mean, this is simply crazy, and yes, we are still on planet Earth. This is not AI generated. It really happened. But let's realize what's likely coming in 2025. Trump is not a champion of global free trade, and that's putting it very mildly. He's going to reshore production back to the US, and that means hitting the world with a tariff war. Trump could be slapping countries with reciprocal tariffs. So if a country imposes tariffs on US goods, say a 50% import tax, the US will impose that as well. And guess who's the biggest importer of Japanese products? It's the United States.
But I said to him, Shinzo, we have to talk about trade. I'm sorry to bring it up. I'm sorry. This is the most one-sided deal I've ever seen. You send millions of cars to us and we can't send you a car. They didn't accept any of our cars. You send all of your farm products to us and you don't want to accept our farm products. I'm sorry, Shinzo, we're going to have to negotiate something. He looked at me and goes, I know. I said, what do you know? He said, well, I know that you were going to be coming back to me, and I know that it hasn't been fair. I said, well, how did it happen? He said, well, we'd ask for things, and the Americans would agree to it.
Now you can tell Trump won't let Japan off the hook, not this time. This is the consequence of America first. So a collapsing yen doesn't mean Japan's manufacturing industry will soar to the moon. But can Japan rely on their biggest trading partner, which is China, to rescue them? The story here is just as bleak. China's EV exports are grabbing market share from Japan, and the Chinese RMB isn't collapsing, so it's still holding strong. Domestic consumption isn't going to go away either. China's stimulus is just going to pump this up. However, Japanese exports are falling across the board. In September, this was an export bloodbath. Japan's exports to China fell by over 7% in September. Shipments to the US also fell by 2.4%. So the two biggest economies in the world, they are buying less goods from Tokyo. Both the US and China, they are becoming more protectionist. This trend won't stop, it will only escalate. The issue here is Japan's big reliance on manufacturing exports when their inputs are very, very expensive. Energy is a very big ticket item that has to be imported. Now, with a collapsing yen, this input gets even more costly. And let's not forget where Japanese gas imports are coming from. They are coming from LNG, that's the most expensive type of natural gas. This counteracts any benefits Japanese exporters get from a weakening currency. Now, the auto industry is one of Japan's economic pillars. Toyota, for example, is Japan's biggest and most valuable company. Its market cap this year hit a high of over $270 billion. However, when you put your products head to head with other fierce competitors, they are starting to lose ground, and it's all in the data. China's the world's biggest car market. They also have fierce competitors, both local and foreign. You have your BYDs, Teslas, and Volkswagen all fighting for market share. Since 2021, sales from Honda and Nissan they have been dropping. Toyota is also trying to hang on, but they are also on the downtrend. In just 3 years, total sales from Japan went from 450,000 cars down to 315,000, and that's a 20 to 30% drop. It's very significant. Because of this, Japanese jobs could get impacted back home. We might see layoffs or stagnant salaries going forward into the future. This creates a very deadly feedback loop that could crush domestic spending in Japan. The picture of domestic consumption isn't ideal. Real wages fell in August by 0.6%, reversing the upwards trend in June and July. Before that, real income was down by 24 months in a row. Once again, wage growth failed to keep pace with an acceleration of price increases. The falling yen is giving locals a nightmare. The cost of living is rising too fast. So Japan has to make big changes in their economy or the damage could compound even further. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to investing in gold and silver, I trust Indigo Precious Metals in Singapore. They have made buying precious metals safe, fast, and easy for investors, whether you're making small purchases or large scale investments. With gold prices steadily rising, ensuring you buy authentic gold at competitive prices is crucial. And as inflation shows no sign of slowing down, precious metals continue to be a reliable store of value. Whether you're purchasing by the ounce, the kilo, or saving up by the gram, Indigo Precious Metals helps you maximize your investment no matter your budget. The best part, you can test your coins or bars on site, giving you complete peace of mind. As a leading retailer and bullion dealer in Singapore for gold, silver, and platinum, they are your go to source. If you're considering your first gold, silver, or platinum purchase, there's no better place to begin than Indigo Precious Metals. For this month only, you can get a 100-ounce silver bar at less than 3% premium. Stocks are limited. So if you're looking to buy silver, this is a great promotion to really consider. And with my code Sean Fu, enjoy a further discount on your first purchase. So start building your gold and silver stack today. However, this isn't easy. The election result has thrown a spanner into the works. Sure, Ishiba, he wants to remain as prime minister. And yes, the LDP still has the most votes as a single party. But the issue now is decision making. Can Ishiba get his policies through? Since 2012, the LDP has been winning big in the elections. For the past 4 elections, they have always attained a clear majority in parliament. So proposing and passing bills is quite straightforward. But things have obviously changed now. Ishiba's party controls only 41% of the House. The rest belongs to other parties like the CDPJ. Can the opposition work together with the LDP? This will affect fiscal and monetary policy. The Bank of Japan will have to react to this as well. And this is where Japan's debt crisis has trapped the economy. When your debt level is double that of the US, you know you're in big trouble. Ishiba is a fiscal daft, which means spending a ton of money to prop up the Japanese economy. However, the CDP is more hawkish. They want to increase real wages. And here are the policy differences. The LDP wants to use fiscal tools to end deflation. Ishiba wants to stimulate the Japanese economy by increasing the national budget, and this includes giving handouts to families who are struggling. So interest rates were to stay low. This allows Japan to borrow even more money without imploding their debt, which actually means the yen will collapse even further. However, the CDP wants to lower the BOJ's inflation target from 2% to just above zero, and that means pushing inflation even further down, maybe 1% or half a percent. This could result in higher interest rates and a stronger Japanese yen. The idea is to help households and businesses consume more. Make no mistake, this is a very hawkish move. So you can see the big conundrum Japan is in. If the LDP gets their policies through, the yen would likely continue collapsing. And let's not forget what's happening in the Middle East. Israel just hammered Iran. The oil fields were spared, but that doesn't mean further escalations are done. So the price of energy is still a clear and present danger for Japan. If you combine a collapsing yen with a supply disruption, this won't be good for consumers at all. But if Japan goes hawkish, this also presents an incredible risk, not just for Tokyo but for the global markets. Long-term yields in Japan are starting to rise up. The 40-year has gone well past 2.5%, the highest since 2008. This is risky for everyone. The higher rates go, the bigger the odds of Japanese investors shifting their money back home, dumping dollars for yen assets. That means getting another unwinding of the yen carry trade, especially if the US suddenly takes interest rates down. Let's say we get a US election shock next week, or inflation suddenly cools and the Federal Reserve they cut by 50 basis points or more. We could see a big move of Japanese money leaving Western assets. This isn't a myth or some far-fetched prediction. This capital flight is already happening under our very noses. Japan's $4 trillion carry trade is already unwinding. Investors in Japan are seeing local interest rates rise, so they are moving back to domestic bonds. From January to August, they bought nearly 28 trillion worth of government notes. They also reduced their buying of foreign bonds by almost 50%. That's a very big drop. If Ishiba gets sidelined and loses the battle, Japan could suddenly turn hawkish, rates could go up, and if that coincides with the Federal Reserve cutting big, we might get a disorderly unwinding. To put it simply, the markets will get screwed again. Prepare for another 5 or 10% collapse around the world. So Japan is facing the economic storm. They are battling an economic Godzilla, and the ultimate kaiju, which is the US economy, could clobber them in 2025. And no, China won't save them this time. Beijing's stimulus, as we mentioned before, will benefit local Chinese companies more. People will buy from domestic businesses, so we can expect exports to China to continue falling. Ultraman won't be coming to save the day this time. Japan is caught in a very tough situation, and frankly, we have no idea which party has the better policy. The IMF wants the yen to collapse even further. They believe the boost to exports will exceed higher import prices. But I kind of disagree with the IMF. I don't think they are factoring in higher tariffs from the US and China becoming more competitive at the same time. So we have to watch Japan carefully because if inflation gets worse, we can expect people in Japan to put their money to stores of value like gold. However, if Japan goes full hawkish, then we might see another yen carry trade collapse. But let me know what you think. Is Japan's economy trapped? And is there a way out of this dilemma? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.